Ladies and gentlemen, please join me in welcoming the speakers on the stage. Dr. Janmeja Sinha, Dr. V. Anantha Nageshwaran, Shri K. Rajaraman, Srimati Ravneet Kaur, and Shri Debashish Panda, who is joining us virtually.
Good morning. It's my distinct pleasure to have the chance to interrogate regulators. But unfortunately, I don't have all of them. And I have one chief economic advisor, and I can't really call him a regulator, so he may get away with it. And then Mr. Raja Raman, who is the chairman of the IFSCA, says, I'm trying to create an enclave which is not bothered by regulators. So he also is trying to escape. So then, of course, Mr. Panda decided that this could be dangerous, so he's doing it virtually from Hyderabad, so he's safe too. But still, we will ask the question. And Madam Kaur is the only brave regulator who is out here. So we should just give her a special round of applause. So, just before we go into listening to the regulators, there were some real reasons why the RBI could not be represented because the term of the governor was coming to an end. But I will say that it is worth having a serious conversation on the costs and benefits of regulation. And I think it's a very, very it's an old theme which has been discussed for a long time. And I think we are always trying to find the right balance. So it's not an easy answer, but it is an important one. And so just as I start inviting the panelists to talk, I wanted to place 8 issues for them to keep in mind. And I'd like to begin with the philosophy of regulation. Should it be paternalistic or should it be adult, giving people information to decide or deciding for them? The second is, how should regulation be customized for a stage of development of the economy? Should there be singular global regulations or should they be differentiated? Because economies are in different stages. The third is, how do you balance risk and innovation? And in balancing risk and innovation, how do we actually measure the incentives of regulators? Because regulators have a very clear incentive not to see failures on their watch, but they are not held to account for growth foregone. So how do you balance this? And how do you even estimate this? Then there is this issue that no market economy can work without efficient contract enforcement. And the first word about efficiency means that it has to be timely. The decisions have to be timely. The sixth point I wanted to raise is, when we talk about the structure of the market and we talk about a level playing field, in an era where industrial policy is becoming so rampant, who should the level playing field be for? For domestic companies, for global companies, for state-owned companies, or should it just be the same? Again, it would be good to get some perspective on that. The seventh issue is, typically, regulators, the original mandate of regulators used to be managing entry, managing exit, managing price setting, and managing market structure. But over time, and certainly after the global financial crisis, it has gone into more intrusive and deliberate oversight of appointments, of CEO terms, of CEO salaries, of board appointments, of terms of appointments. Are these useful, and how do they shift risk from the board of an institution to the regulator? And then finally, as the finance minister just in the morning highlighted, there are challenges to the global economy which are far-reaching and which are coming out of causes which are universal. Technology and artificial intelligence, the challenge of sustainability and financing it, demography and its different elements across the world. Some places it's pension liabilities, other places it's jobless growth, and the overwhelming growth of inequality and what regulators might do to impact it. So I wanted to just put that out there. And I'm also urging all of you to think of your questions. This is a closed door session, so you can be as open as you want in asking the question that you want. So I'd like to begin by first inviting the Chief Economic Advisor, Mr. Anant Nageshwaran, to give some introductory comments. You have about 7 minutes.
Good morning, everyone, and thank you, Jermaine, for those extremely thought-provoking list of issues that you have highlighted. In fact, I want to start from the very last observation he made, that it is a closed-door session, and therefore you can be open. So therein lies the paradox, right? You need a closed-door session for people to be open, and that kind of a paradox or dilemma applies even to regulation as well. And he did highlight those trade-offs in a way.
We just made it an open door session. The media is present. So it's in full transparency.
Yes. So now I think it's difficult to be open, right? So I think the 8 questions or the issues that he posed in his initial remarks, should it be customized? Should it be global or differentiated for countries? And he said the incentives for the regulator are mostly oriented or slanted towards risk avoidance. How do you hold them to account for growth sacrifice? That is probably the most interesting question here. In general, when it comes to quality control, you have type 1 and type 2 errors. The mirror image of that. In quality control, if you are extremely quality conscious, you would rather let good pieces not be rejected by setting the parameters so strict that you don't want even a single bad piece to reach the customer. Alternatively, if you are type 2, if you're more interested in making sure that your bottom line is your priority, sometimes you may be willing to tolerate even some bad pieces, but you don't want your production process to go waste, and therefore not a single good piece should be rejected. So obviously both are two different settings in terms of how you set the quality control testing. Similarly, in regulation, the question always that regulators have to watch out for is, do I want to make sure that not a single deviant behavior goes unpunished? In which case, you would rather take the risk of taxing or stressing out even people who behave well. Or if your focus is, do I want to encourage economic activity? And in the process, if I let 1 or 2 deviant behaviors get away from time to time, it's inevitable, but my focus is on prioritizing economic activity rather than ensuring that not a single economic agent or participant goes unpunished for violating rules, laws, and regulations. So this is the trade-off. In general, I think we have over the years, I'm not talking over the last 7 decades or 7+ decades, we probably have focused on the fact that if there is a rule, if there is a regulation, then our job is to make sure that not a single entity deviates from that. And therefore, our efforts are geared towards making sure that not a single act of deviation goes unresponded to. And that's exactly the question that Janmay posed in his initial remarks. How do you then reward or hold the regulator accountable for innovation foregone or growth foregone? But if you want to set that kind of a performance metric for a regulator, the very framing of that question tells you how difficult it is, because the cost of an innovation foregone is not easy to measure. It is a counterfactual scenario which is not easily visible, because the very innovation that you talk about is something that is going to be futuristic in terms of its consequences and effects, and you can only visualize it or estimate it, but there is never a possibility to say concretely that this is the loss that you have encountered by not allowing this innovation, because it could also be costly innovation. So therefore, by the very nature of the process of regulation is that the regulator can easily be questioned, because questioning happens on the part of the public or the regulated entities on an ex post basis, and regulators are framing their decisions on an ex ante basis, and counterfactuals are impossible, and therefore it is always possible to say that you over-regulated or you were basically anti-innovation. It is possible. But that being said, in general, as I said, in our country, we have focused more on making sure that not a single act of deviant behavior goes unpunished. And that is something that we need to reflect on. Where is the trade-off? Especially in the current context where I think growth is going to be at a premium. World economy is not going to be very certain in terms of the outcomes. If anything, the range of outcomes has become much larger. Therefore, what is it that the regulator has to optimize rather than maximize in this case? And that is the question that the regulators have to ask themselves. But I do understand that sitting with me are regulators, one from the Competition Commission, one who is heading an entity which is, as Janmay put it, beyond regulations in some sense, and there is an insurance regulator virtually available for us. But financial and non-financial sectors, there has to be a distinction. In non-financial sectors, excepting natural monopolies or utilities where you have to have a regulator to protect the customer interest, you can expect competition to take care of much of the roles that regulators are expected to perform. So as long as you create a competitive environment as close to the theoretical perfect competition, then you are fine. But in financial matters, the only reason regulators have a natural tendency to lean towards subconsciously, unconsciously towards what you may consider as excessive regulation is because of two things. The effects are systemic and not sectoral. And two, when things go wrong, it is the state that is expected to bail out the overall economy. If I'm going to be asked to pitch in the resources required to set the problem right, then naturally I have to have a say in making sure how that system is run as well. So that is how the regulators think. So in that sense, we do need to make a distinction between regulation with respect to financial sector and regulation with respect to non-financial sectors of the economy. So some of the tests that were implicit in Janmay's initial remarks, I think, should lean towards one side when it comes to non-financial sectors in terms of encouraging innovation, letting competition play the role of a regulator, etc., and the marketplace. But when it comes to finance, the question becomes that much more nuanced. And that is where I want to leave, because I have completed my 7.5 minutes given to me. Thank you.
Thank you. And thank you for keeping the time. Now I am going to come to Mr. Rajaraman, who is the chairperson of the International Financial Services Center. And it's a unique job that he is doing. He's creating a center where he is deciding the level of financial regulation that will apply within it. And so I'd ask him to give us his perspective.
Morning to all of you, ladies and gentlemen. Thank you, Janamajay. It's a pleasure to be here, and I'm tempted to also butt into the responses given by Anant. I think the answer to the question on whether it is customized or globalized also comes in from a perspective of the problem at hand, because the problems can be, like for instance, if you're in a domestic sector which is not really so much influenced by the global economy, then probably you can have customized solutions. You must have customized solutions because that is a completely local problem. But if you have a part of the economy which is actually highly influenced by global forces, I think, or global currents, then I think the answers cannot be local. It has to be a combination. You have to understand what plays out in the global economy. I'll just give an example. For instance, this question of climate taxonomy, I think has been being battled by world over, because today net zero is a big agenda on the table. The world will require about $260 trillion according to a recent estimate. So generating this amount of capital will require an understanding of who is going to put this money and what is going to be used for and how is it going to be used. So therefore, one can never be isolated from what, I think, because that certainly is, for a country like India, I think we will be looking out for capital from the rest of the world as well while we generate capital. Therefore, it is very important for us to align ourselves with the rest of the world. I say alignment is, there are shades of gray. I think that it doesn't mean that you completely align yourself with the rest of the world. There can be large sections of alignment, and still you can probably, I think, have something very specific to your economy. So in the International Financial Center, we had this problem. I think we don't have a climate taxonomy in India as yet, but we want to raise money for we want to support the Indian corporates in raising green finance. So what we did was our regulations have permitted the Indian corporates to issue bonds which follow the international taxonomies. I think the ICMA green bond principles or the climate bond initiatives green bond principles, the EU taxonomy, etc. So therefore, today, as we stand, in the absence of a local taxonomy, we are able to raise, the Indian corporates have raised nearly about $15 billion. Issued bonds worth $15 billion. Have raised nearly about $1.5 billion from the Indian bank, from the banks in GIFT City, and so on and so forth. So the point is that if you want to solve a problem which is probably spans continents, I think the solution you must look is from a global perspective, I think. So I would still believe that you must have the problem statement at hand before deciding what we want to do. The second point also is about the intensity of regulation. I think whether it should be completely, I think whether they should be, to the extent, Janamajay asked this question, whether regulation should be to the level that actually stifles innovation. I think this is the balance that regulators need to find. I think it is like the father and mother in a family. I think this is potentially the problem that everybody faces day in and day out. So I think every father and mother knows how to regulate the children in the household, I think, and how they they go along with their daily lives. So it's you can't be, I think, kind of doing it in such a way that it actually makes the child, unhappy. So the same way, I think, same thing applies to regulation. You do it in a balance that actually enables the market to grow. At the same time, ensure that the risks are within control. I think mitigating risks which are in the horizon is very important for the regulator, because at the end of the day, no regulator gets praised for good things. I think it is probably only when things go bad that questions get asked. I think so. Therefore, it's very important for regulators to ensure what is it they are actually in for when they actually put out a regulation. I think so. I certainly agree. Innovation is very, very important for the economy, and also when India looks forward to the next 25 years as part of Viksit Bharat, I think it's very important for us to support innovation. So that's why I think all regulators have come out with sandboxes. I think so. This is where, in a very controlled environment, experiments are carried out. I think we have a regulatory sandbox, we have an innovation sandbox. The innovation sandbox permits early stage experiments. the regulatory sandbox permit late-stage experiments that are ready to go to the market. So I'm sure that there are answers, I mean, which can have this balance. The answers are like this, I think, having a sandbox to support innovation, and then do a thorough risk analysis and risk identification, risk mitigation, etc., and find the answers to the problems that you are likely to face in the future, and then probably set the conditions for this particular product or service to go live. So I'm sure that with these kind of frameworks in place, it is possible for regulators to actually support experiments. And for instance, the second answer to the same question would also be that regulators need to be consultative in the work they do. I mean, whatever they do, they must consult the market, because the wisdom lies not inside the regulator, but in the market. Because a lot of things can come from the market, a lot of ideas can come, solutions can come from the market, problems also are in the market. So probably a very sound consultative framework. I mean, in fact, FSCA is one of the few regulators which have a regulation on regulation making. So we have a mandatory consultative process that the papers, including the draft regulations, are put out to the market, and extensive consultation in the market are done. We have markets committees for each vertical which actually consult. So innovations get discussed there. For instance, we have set out a number of expert committees on tokenization, on green bonds, on transition bonds, on things like cat bonds, which are important for the insurance market, and so on and so forth. So all these committees give us a lot of wisdom. They collect wisdom from across the world, and then they crystallize them into potential draft regulations, which are then finally put out to the market for, once again, for the final round of consultations. So I guess the answers are in the way regulators do business. I think it is not that regulators stand in the way of innovation. They can walk along the innovation path in a very, ensuring that it doesn't run off course. I think, because finally, at the end of the day, the regulator's job is to protect investors. That is the final edge, I would say, the bottom line. So if you don't protect investors in whatever regulations that we put out, then I think we are probably not fit to be there. So from all these perspectives, I think there is a possibility, like all families, I think we can all be good parents, so there can be good regulators who can find that balance. Thank you.
So now I'm going to come to Mrs. Kaur, and she's the chairperson of Competition Commission of India. Again, this is a very, very critical job, and I want to, muddy the water a bit, if I was to say that the two truly global superpowers today are the US dollar and the Anglo-Saxon press, and the use of the US dollar for non-tariff barriers is at a level which is very difficult for the world to actually deal with, and whether it is exercised as a state power to impede and hamper other countries, or actually to create a level playing field, or to spread global values, is sometimes quite interesting. You have people within the country who can be run for president with elections, and on the other hand, an Indian corporate can be charged under the Department of Justice for some reason. It does seem a bit odd, but it is the fact. So now when you look at Competition Commission of India, and you are trying to establish a level playing field and prevent market domination, what all do you look at? How do you evaluate all the players? How do you go through the process of regulating?
Thank you. Thank you very much, Chinmayji, for setting the context. When we look at the Competition Commission, the Competition Commission works under the Competition Act. So that's the framework which is set for us. And the way the framework works is very simple. We first identify what is the relevant market. Then we look at the market shares. What is the market concentration levels? Where is it going? Who are the key players? What are the competitive constraints which would be there Is there any countervailing buying power? So we have all this written out in our act. In fact, we have a very detailed competition act which lays down all the factors that have to be kept in mind when we do a competition assessment. So basically, within that framework, then what is the approach? That is something which I think is very important. Because unlike a paternalistic approach, which you were talking about in the beginning, we don't have that approach at all in the Competition Commission. So the way things are looked at in the Competition Commission is that let's have a case-to-case approach. We are not going to have any rules which are rigid and which are irrespective of the cases. So in each case, an assessment is undertaken, and the overall ecosystem, the entire market is looked at, and based on that, then the Competition Commission comes to a final decision. Now, this has become even more important because with this advancement of technology, what we are finding is that markets are multi-sided. So, as you had indicated, level playing field for whom? That's a very important question. Because when you're looking at multi-sided markets, then consumer welfare may indicate something different, whereas what is impacting the other stakeholders in that ecosystem, which could be your startups, your small enterprises, new entities which are coming up in that sector, they may need a different dispensation. So that is when I think the role of the Competition Commission becomes quite challenging, because we have to balance the two things. Now, so far as customization is concerned, I think that's a very important thing which we find in the competition side. Because what's happening is that the way the EU looks at things is very different from the way that we look at it or the way the US looks at it. We were talking about the US economy. So now what we are looking at from the Indian perspective is that we have the third largest ecosystem of startups in the world. This is not the case with EU. So whereas EU can be looking at something like a Digital Markets Act, and it has a very different perspective, a different way of looking at it, when we are looking at framing ex-ante regulation, we are very conscious of the fact that we are having a lot of startups, and they are in fact the hub of innovation, of entrepreneurship. That's where we find growth in the Indian economy. So keeping that in mind, in the Competition Commission in India here, all the time, we just use what is been done outside as a guide, but we frame our own solutions. We look at things from our own perspective, what impacts us, and how we should work within the Indian economy. Because our role is to provide a level playing field to promote sustained competition in Indian markets. So that's something which is very clear. The other thing is from the innovation perspective. One thing which is very important is that the industry must get timely decisions. That's very important. Otherwise, innovation, mergers, acquisitions can get held up. And that's a very important aspect, which is inorganic growth of the industry. So in the Competition Act itself, now with the amendment which has come in 2023, we have some very tight timelines where we are saying that if within this much period a decision is not made, it's considered to be deemed approved. So that's one dispensation which has come up. The second is this trust-based regulation. We're saying, okay, we have set out the broad guardrails. So in case there is no overlap, no horizontal, vertical, complementary overlaps, you can go ahead, and the day you notify the merger or the acquisition or combination before us, that very day it is taken as approved. So that's how we look at a timely decision making, that we will be coming back to the entities, to the parties, and giving a very clear finding as to what is the view of the Commission. The third thing where I would like to mention is that keeping in view that India is a growing economy, we look at mergers and acquisitions in a very facilitative manner. Our intention is not to block deals. In fact, there are some jurisdictions across the world which have blocked mergers and acquisitions. Our approach is that let's look at some structural remedies, let's look at behavioral remedies, and let the merger go through. So that's another aspect which is very much customized to the Indian requirements, to what is needed in our economy. So accordingly, we work on that side. One of the aspects which you mentioned was this about appointment of CEOs and their pay structures. That's not something which really comes in our domain. But looking at what our developments are happening, especially in the technology side, artificial intelligence worldwide, there are concerns which are coming up on poaching of staff. Because that's one aspect on which is being looked at in the US economy, even in the EU, that these big gatekeepers, these digital platforms, which are having a first mover advantage, even in case of AI, they are poaching upon staff of small startups, small companies which are coming up working on generative AI. So that is an area of concern which has emerged on the competition side. We have so far not looked at anything of that sort here in India. But of course, if there is a requirement that they are trying to escape notification before the commission and do this kind of a thing, then maybe that conduct will also be looked at. There's one other aspect which we are looking at, which is your deal values. I think I'm just out of time, so last thing. On deal value, again, we are trying to keep in mind that there are these zero-priced digital models, business models which are being operated. So the asset turnover thresholds may not be there. So creeping acquisitions, killer acquisitions, we are now trying to capture them through the deal value. So that has also been provided. So all this is really customized for the Indian scenario and how we have to protect our ecosystem.
Thank you so much. That was a very comprehensive discussion. And now I'm going to go to Hyderabad and catch Mr. Panda, who's sitting there, and ask him to tell us how he's going to. Actually, he's been doing a pretty good job transforming the insurance sector. So I don't have enough to criticize him with. So then I'll ask him to tell us what more is he going to do to make it even better.
So what does regulation do? If I draw that parallel to the financial sector, then it serves as the invisible infrastructure, like the lanes, the signals, and the guardrails, to make sure that the journey is efficient, safe, and predictable. It further creates stability, it mitigates risk, and also, most importantly, it fosters trust, which is the lifeblood of any financial system. And more importantly, like the insurance industry, which is built on the promise of protection, so trust is indispensable. And without it, the sector becomes absolutely weak. So therefore, there is a dual mandate of regulation. One, to grow with innovation, and second, to also ensure stability at all points of time. So regulation doesn't mean that you will stifle growth and progress. Then what is the point of having the sector? What is the point of having the regulator? So growth with innovation and also foster stability and also take care of the sustainable development of the sector and also make sure that it doesn't grow irresponsibly and recklessly so that systemic risks creep in. So as we are today embracing the era of technological advancements and the shifting market dynamics, so the key question therefore becomes how can regulation evolve to foster innovation while also safeguarding stability? In the Indian insurance sector, what it needs to do is to harness the economic and demographic shifts, number one. Secondly, also increase trust in insurance by creating a very delightful journey for the customer, for the policyholder, right from the solicitation till settlement of claims or resolution of grievances, if any. The insurance sector has to create an experience, and the regulatory framework has to be enabling and supportive. So the foundation of insurance would rest on making insurance simple, available, accessible, and most importantly, affordable. So therefore, ensuring robustness, stability, and efficient risk management. Now, what we did at IRDAI, thanks to my entire team and to all the stakeholders, because we had gone into an extensive consultative, participative, collaborative approach and many iterations to thrash out issues which had some pain points for the stakeholders, but definitely keeping the policyholder at the core, the foundation was built. Now, what we did was we adopted a building block approach to refine the present, to harness and leverage the technology, and also to unlock the value of data, which is very important in the insurance sector. How do we reach the last mile? Because insurance is still a push product. How do we make it a pull product? And how do we reach out to the last mile? That was a challenge. Again, tried to build something around that. And also ensuring that while doing all of this, make sure that the sector is stable and also future ready. And all this has also given us the confidence to envision insurance for all by 2047 in alignment with the Viksit Bharat call by the Honorable Prime Minister. So right from beginning, from the entry of an entity into the sector, to launching of products, to managing the operations and expenses, improving the distribution efficiencies, reducing the compliance burden, raising capital, all of that has been streamlined and made more effective and efficient. As far as the risk management practices are concerned, there's a new corporate governance framework in place, and also an enhanced risk management framework so that the companies as well as the regulator are aware of what they are doing on a continuous manner. So moving from a factor-based capital regime to a risk-based solvency regime, then also trying to implement a risk-based supervision framework, moving away from the so-called rule-based approach, compliance of the rule-based approach to a risk-based supervision, and also aligning ourselves, the sector, to the international financial service standards. So the regulations have now moved away from a rule-based to a principle-based approach. We had some 78 odd regulations, which has now been reduced to only 20 out of 50, out of which 15 are concerned with the industry for their operational issues, and remaining 5 are internal to the organization, which means today the insurance sector will have to operate only within the framework of 15 regulations, and all of them are principle-based. Each of this regulation is paired by a master circular, which details out by way of a guidance document for more clarity and simplicity for implementation. Now, all of this today has been looked at by the investors, not only within the country, but even abroad. And we have seen that after a hiatus of almost 12 years in the life sector and 5 years in the general insurance sector, 6 new insurers have joined or who have entered into the sector in the last 2 years. That is a very, very promising and very, very reassuring that more and more capital would flow into the insurance sector and our vision of insurance for all by 2047 would get realized. So this is, I'll stop here in the first phase. I hope I have been able to give an overview, but I'll go into the building blocks as to how, what process we adopted and how we were able to accomplish what we have done in the last 2 years, which has actually been very challenging for us, but exciting. And today the whole world is looking at how these changes have been made, and primarily with the intent of promoting growth along with innovation and reducing the compliance burden and also providing a platform for ease of doing business. Thank you.
So thank you. I am going to put a question to both you and Mr. Anant Nageshwaran. Do you all not talk to each other? I really was very happy with a lot of what the insurance regulator was talking about. Do RBI and IRDA and others talk with each other, and where? And do they share these ideas, and why don't they pick up on each other's ideas? I am asking both of you, are you not part of FSDC? What all do you do there? Why don't you tell some of your fellow regulators, Mr. Panda, about some of the things you were talking to us about?
No, we do share, for example, with Raja Raman, we are constantly sharing all of this, even in the FSDC. And I'm happy to also inform that Mr. Anant Nageshwaran had also mentioned last year what all has happened in a very cryptic manner in the insurance sector in his economic survey. So, but a lot of, things come out in the media also. Somehow they get, and we put up also from time to time the changes that are being made. All our draft regulations are placed in the public domain for comments. So all of that, it gets out in the public domain and people get to know. And in the FSDC also, we do share the major initiatives that we have taken. So, and in the FSDC subcommittee as well. So these are definitely being shared with the fellow regulators. And I'm sure everybody is doing his own bit. So that's.
I think regulatory politeness is always important and is evident. But as I last recall, when I looked at, since in this century, I think 4 new bank licenses have been issued. And of those 4 new bank licenses, 2 of the banks didn't do so well. So after a lot of deliberation, and insurance has issued many, many more people have come in. And so I wonder how these conversations happen. I am asking anyone who is sitting in the FSDC who can answer. And Mr. Anand, if you want to answer, you can answer too. Anyone, I have left Phoebe out right now. I think I have to include them too in my questions. I think that was just to create some degree of discomfort in this panel, but now I can open it up to anyone else who can ask. Yeah, sure, please.
See, regulation making and the processes followed, all, I think, as I said, I think would depend on the context, I think. So in each sector, in each, I think market has got a different flavor. So as I already said, I think Mr. Panda also touched on this. Today, regulation making is also becoming international, I think, because, like for instance, International Financial Services Centers Authority is a member of the International Organization of Securities Market Organizations. So the IOSCO, we are a member of the International Association of Insurance Supervisors, I think, and many other regulators are part of BCBS, FSB, and many other kind of organizations. So there is a trend towards understanding, why regulations should actually be simplified and be aligned with each other, and also kind of, and I think there are new solutions being found to the old problems, I think. So therefore, I would say that discussions not only happen within the FSDC, which is completely domestic in nature, but also, I mean, it's a pan world, I mean, I think kind of, discussion which happen. There are very regular meetings, subcommittees, working groups, reports, I mean, I think. So I think constantly we are at the cutting edge of, I mean, what needs to be done next. And on top of that, we have the market as well, I think. So I guess, I mean, a lot is on the table, I mean, I think already.
Okay.
Should I?
Yeah, sure.
No, I think the chairperson has the advantage of putting others in the witness stand, and therefore he has a certain privilege which he is fully exercising. But I just want to, again, in the spirit of the open discussion that he is following, I would like to throw the question back at him or also back at the audience here. When he talked about whether regulators are talking between themselves in the FSDZ, of course, when it comes to the financial sector, two regulators are not represented on this stage here. One is SEBI and one is RBI. But I want to ask two questions. There was an era when it comes to financial sector between 1990 and 2008, when in general, worldwide, we followed, I'm not talking about India, worldwide we followed a policy of laissez-faire, let the market regulate itself, expecting that the principle of competition will work in the same way it does in non-financial sector. But in the financial sector, actually competition leads to sometimes excessive risk-taking, and competition can be a source of instability rather than stability, which is not the case with respect to non-financial sectors of the economy. And the manifestation of that was, or the climaxing of that was the 2008 global financial crisis. So how much should regulators be internalizing the lesson of the 2008 financial crisis, and where should they draw the line, and how far they should go are still open questions. And that brings me to the question that I want to leave with the chairperson or with the audience here. Coming to India in particular, are we as a society capable of self-regulating so that the regulator doesn't have to be biased in favor of risk avoidance and be more biased in favor of innovation?
So I think these are important questions. Firstly, I would like to change the nomenclature of the global financial crisis, as my friend Rakesh Mohan has done, to call it the North Atlantic financial crisis, where much of it originated in the CDO markets with a very incestuous relationship between credit rating agencies and their biggest customers and clients who were paying for 60% of their profits. And we created an unstable structure where even after the crisis, none of the banks were really punished. They were there was not a single bank CEO who was sacked or even went to jail. I mean, even some of them had to resign from their own boards, but not really from the regulators, which merged a few banks. And also all the relief was given to the banks, not to the individuals who suffered. In fact, we had asked Tim Geithner this when we had gone as a CII delegation, that in India, when this happens, we forgive the loan to the debtor and not to the institution. So I think that question itself begs for us the question of appropriate regulation for India, and what a developing country at this point requires, and how it must break from some global norms which get forced upon us. And I mean, even the Basel Committee norms came from by US and Europe fighting with each other about competitiveness and one having higher capital standards than the other. We were off the debate. We didn't even matter at that stage, so it was not even relevant. But now, as we are starting to matter, and as many of these discussions are starting to happen, how do we frame them? And I loved the fact that the finance minister in the morning said she wants this forum to really represent the global south, and the needs and requirements of the global south. How might we have a really deep discussion on the needs of regulation in the global south as distinct from the global norms which are imposed, almost imposed upon us, So I would just like to raise that also as a question out there. But I've always promised that I will always have, in every session that I moderate, I will allow the audience at least 3 questions. But if the audience is willing to ask me brief questions, I'll give it to them. If they want to make long statements, we'll have to do it after the panel. So are there 3 brief questions? Yes, sir. Yes, sir. First you, yeah.
Thank you. I'm Sandeep Parekh. I'm a financial lawyer. And quick comment/question. In terms of, I think...
The key word will have to be brevity, but...
and that's exactly my point on regulation. I think our regulations end up being very, very loquacious. And, just to take an example of SEBI definition of fraud, it runs into 50 pages of regulations, another 50 pages on insider trading. The same thing is captured in 50 words in the US. So I think one of the problems which is kind of reflected in what Anand said is, the type 1 error which regulators hate is that we love to write more. And in that we dilute it so much that, I wrote a piece saying that the SEBI definition of fraud includes swimming, jogging, and running. So we make it so broad that it becomes kind of somewhat not very useful. So this is just kind of a comment to leave out there.
Yeah. And after that, I'll come to you. So, but
No, just literally.
I'll allow one more question from this side because the 3 of them were on that table and they hit the buzzer fast. So what could I do?
So literally just one question. We hear a lot about US, Europe, etc. One question is, do we try to learn from China? Because that's like a middle income country that may have solved a lot of these issues internally, but maybe doing it in a different language and so may not be part of our discourse. So is that something to be, just thinking about, how have they solved these issues?
Okay. And ma'am?
Good morning, everyone, and my question is for Dr. Panda, if I may. Morning, sir. I represent a company called Renewbuy.com. We are a digital insurance distribution company.
But the brevity was the key word,
I'll come to the questions quickly. I have seen a lot of regulations coming for the insurers, the way it is being distributed through banks, etc. Question to you is your thoughts on how are you thinking about digital player like us? Because even Nirmala Sitharaman did mention about digitization and now it getting into various aspects, including agri. Your thoughts on that? Because my company is the one who's not, whose actually purpose was to make, is to make insurance simple and accessible. And we are working towards taking insurance literally to all the nooks and corners of
but unfortunately, we are not going to be able to take specific questions for specific companies. This was more on the policy frame. There was one gentleman there. Yeah, please. Quickly, because I need to give a comment to all the panelists.
A lot of these complex, products are coming, for example, cryptocurrencies, blockchains, etc., which are going to require a lot of these resources. For example, they store a lot of billions of dollars, and they are very tough to, regulate as far as these regulators are concerned. And even these lot of these modern GPUs, for example, these LLMs basically are also targeting that kind of market. So how is India going to be, fit into it? Because sooner or later, this thing is going to come to India also, because they also require a lot of investment, in this field.
Okay, fine. So now, could I ask each of the panelists to answer whichever question they wanted to, or say something that they wanted to, which they had left out in their introductory. We just don't have enough time to go into a specific Q&A, and this was also supposed to be much on policy. So crypto is fine, but the others.
So coming to this question of brevity, I think, which was your topic as well as his. Our view has been, for instance, the International Financial Services Center, we had in the Act of Parliament, which delegated the powers under the financial sector legislations, the unified regulator, that is IFSCA. So we had the opportunity to decide what way to go, I think. So we didn't cut and paste domestic regulations. What we did was we studied what international financial centers do, and then picked up the best practice from there and made regulations which are largely principle-based, which Mr. Panda also referred to. So our view has been that I think the more the words we use, the more we limit regulation. Because then you're saying that you're defining very clearly what that box is. So our view is that I think I agree that maybe there may be situations when financial crisis or kind of events which actually force regulations to become more prescriptive because you're trying to fix a problem which was probably not foreseen before. But I think we should stay clear of that because we should ensure that the regulations capture pretty much the big picture of what needs to be regulated and what needs to be done. So our view has been, and I think though I think there may be pressures on us, I hope that, we continue to resist that to actually become more prescriptive. I think regulations should stay principle-based, clear, simple, and understandable to the layperson. I think.
Okay. Mr. Panda?
Yes, sir. Just a quick response. As far as the IRDA regulations are concerned, they are quite concise. And, as I said, since we have moved to a principle base, so the number of pages won't run into 20 or 30 or hundreds. It just clearly spells out under the principle in which you have to operate, whether it is management of expenses, whether it is the use and file mechanism, and so on and so forth. However, a little lengthier one could be the protection of the policyholders. So I think there is a necessity because many of our customers or prospects may not be financially literate or understand what are their obligations or what are their empowerments and entitlements. So there we have tried to elaborate a little deeper and more in details for the understanding of the customer so that he or she, when they go and buy a policy from insurance companies, they are fully aware of what they are buying, like the customer information sheet or the benefit illustration sheet. So I think, most of you are, all of you are rather welcome to look at those regulations and send your comments. Although we do put up all these draft at the draft stage in public domain for comments, but I think we have attempted to bring about a set of regulations which has also been appreciated amongst the global investors, notwithstanding that the domestic sector also finds it quite interesting to read. As far as the technology part is concerned, or the digitization part is concerned, I think the lady addressed a question. So in order to promote fintech and insurtech solutions to be mainstreamed into the insurance sector, we are promoting that in a big way by way of revamped regulatory sandbox, where you can file your application 24/7, 365 days a year, with an experimentation period of almost 3 years. Typically, a longer period is required for life insurance products. And once it is tried, tested, proof of concept established, it can be mainstream. As far as distribution is concerned, we also want to give we are contemplating to that a separate identity for digital distribution. So that work is in progress. However, as far as a digital public infrastructure creation is concerned for the insurance sector, which doesn't exist as on date, we are contemplating to bring about a new DPI, the Bima Sugam, and we hope that will be changing the face of insurance and also become a game changer in the like what UPI did for the payment and settlement. Similarly, the Bima Sugam would do exactly that for the insurance sector. The Bima Sugam will be an electronic marketplace. It will be integrated with the India stack, and it will be a marketplace which will be going to the doorstep of the customer. So we will be able to go to the last mile, to the last household, and to the last person, thereby making insurance available, accessible, and also at the same time trying to make it affordable by reducing the costs, including the distribution and the management expenses. So that is what we are working towards. And also on the digitization part, we are also revamping the IIB, which is the Insurance Information Bureau, which was till yesterday only a repository, but now it is becoming a center for data analytics and more of advanced data analytics. So these are some of the steps, and for to welcome the insurtech and fintech players, 15th of every month we have an open house. Email request will be entertained, and slot for a presentation from you, and proposals which are found interesting are forwarded to the General Insurance and Life Insurance Councils so that it can be taken ahead and taken forward.
Wonderful.
Thank you.
Wonderful. Madam Kaur?
Just a small intervention. In fact, one of the challenges which we as a regulator face is something I would like to talk about. That is that CCI is a sector agnostic regulator. And it is not possible for any person or any organization to know everything about every market, especially in a scenario where the markets are so dynamic and changing so rapidly. So we also use market studies as a way of understanding the market. And the approach is that proactively we'll engage with the stakeholders, understand the market, and only then intervene. So the purpose is that we would always like to balance innovation and risk. So to say that whatever innovation is happening, things are changing so rapidly, markets are so dynamic, and these changes of AI, blockchain, and Internet of Things, the various platforms, the way they are working. So our approach is always to try and understand the market before we intervene. So we maintain the balance all the time.
Great.
Response to the question on crypto, etc. I think in general, we need to be very sure what are the criteria we want to set up for the regulator to be not standing in the way of so-called innovations. We are a low-income country and we have extensive amount of financial illiteracy, which is of course true in developed countries as well. So in that situation, how do we distinguish between not standing in the way of moonshots, and in which sectors do we have to be more conscious of social costs and benefits, whether it is crypto, bitcoins, and online gaming, etc. But to offset that, I would also say one thing. The same principle of transparency and social costs and benefits that we want to apply to regulated entities and some of the financial innovation should also apply to the regulators themselves. But they have to live by the same principles of transparency that the regulated entities are expected to live by, which means information sharing by regulators. Why are they proposing a particular regulation? What is the information at their disposal that is prompting them to contemplate it? What are the goals that they seek to achieve with that regulation? And what is the terminal date? And what are the criteria by which they will stop this and then retract? So in some sense, regulators have to be conscious of the limits of their unelected power. They are unelected power, and by definition, unelected powers are normally not held as accountable as elected powers are. So they have to impose it upon themselves. In other words, there has to be an accountability on the part of the regulator, and they have to be conscious of the fact that they represent unelected power, and therefore that responsibility to wield power consciously is also something that we should demand of regulators.
Wonderful. So I want to bring this session to a close, but first I really want to acknowledge the openness with which everyone on this panel took the questions and appreciated the kind of challenges that were put to them. It is really a sign of a really evolved regulator to be open to critique and questioning. And so I really thank them and congratulate them for this openness in this panel. Thank you so much.
Thank you, speakers. May I request Dr. Sinha to present a token of appreciation to our esteemed speakers, please. And I also request Ms. Tanushri Banerjee, Deputy Director General, CII, to present the appreciation token to Dr. Janmeja Sinha, please. Would request the speakers to please step forward for a photo op. Thank you, ladies and gentlemen. And with this, we are closing the session. The next session, India Manufacturing Growth Story and Future Readiness, will take place in Darbar Hall at 12:15 p.m. You may like to join, please. Thank you.